We have some of the highest inflation in over 40 years, and what's going to be the impact on your ability to pursue your retirement? In this video, I'm going to share with you 5 different items that you can address so that you can deal with the impact of inflation and have your own checklist to guide you. But before we go there, subscribe to my channel. I have over 30 years in this business, and I want to share with you some of the conversations I have with my clients so you can benefit from that as well. So this is no joke, the level of inflation that we're at, and for the most part, it is not a good thing. However, there are 2 sides to everything, and I will tell you, for those of you who are about to get Social Security or getting it, there really is a silver lining here. So you could go to my video here to take a look at what the potential upside would be as a result of inflation and its impact on cost of living for Social Security. But as good as it is for those who are going to get the cost of living increase, there really is a negative side to this inflation, and it can really have a tremendous negative impact on the way we wish to pursue our lives and the way we feel about how we're pursuing our lives. There's a very real sense of not just the financial, but the emotional as we go through this type of volatility, not just with interest rates, but with our portfolio. And we really need to get a handle on how to manage our lives through this, particularly as we're facing retirement. So let me share with you some of those things you need to be taking a look at so that maybe you can get a better handle on managing these tough times. So the very first thing you need to be taking a look at is to review your current living expenses. You can Google cash flow worksheet and do this together with your spouse or partner if you have one, and really identify some of those items maybe now that you may be possibly better off to put off a little bit later. I know you have some fixed expenses, but maybe there are some of those bigger expenses you're looking to pursue at this moment that may be better off maybe to put it off maybe 6 months or a year. You will need to prioritize what's most important to you and then figure out if there's a way to reduce some of those current expenses or some of those bigger one-off expenses, and that may help you significantly during times like this. The second item to look at, and it sort of aligns with the cash flow issue because it has an impact, and this is reviewing your debt, particularly your variable debt expenses. Now, your home mortgage, if you still have one, is a fixed mortgage typically for many. And it may be 3%, 4%, 5%, but it's on an underlying long-term asset that is probably going to appreciate, right? That's a good debt to have. I don't have a problem with that. But you may have some other variable debt expenses or higher debt expenses like credit cards where there may be no underlying asset. It's a non-deductible interest rate. Could be the car that is depreciating in value as we drive it each day. You may really want to take a look at each and every line item with regards to the debt that you have, because it may have a significant impact on your day-to-day cash flow. And try to understand if there are areas where you need to accelerate your payments. The third line item is inflation's impact at the moment on the value of your portfolio. And the biggest message that I can share with you is you need to divorce your emotions from the financial decisions. Because the headlines are not great, and I don't want you to panic or overreact. You need to, with your portfolio, have a plan, a vision for where it needs to be over a long period of time, and not allow for the value of that portfolio on a very short-term basis drive your decision making. As I tell my clients, really nothing's changed with the market. And what I mean by that is markets go up and markets go down. They always have. There's always some sort of volatility. But what's really changed is that we've gotten older. Maybe we're about to, or we're into retirement, and now we feel a little bit more vulnerable. Again, an emotion. But you can't let that vulnerability impact our long-term decision making for the underlying assets, if you will, the players in your portfolio. So make sure, in concert with your advisor, that you have the appropriate long-term places in your portfolio that are in alignment with your cash flow goals over a long time. Make whatever necessary adjustments you need at this point in time, but don't make big decisions right now. Again, I'm not giving you advice. I just want you to think about how you should be thinking along with your advisor. Now, the next item is, and it relates to both income and your portfolio, is what if you're drawing income from the portfolio? And here may be a lesson learned for those about to retire. Okay? You may want to, in advance of your retirement, if you think you need income from the portfolio, to designate one particular bucket that is just cash. Because you really don't want to be taking income out of the portfolio at a time when the market is going down. I don't think the industry does a good enough job of explaining the impact on portfolios when you retire. Because when the markets are down and you're taking income, it can be a double whammy, and it can be very difficult to overcome depending upon the timing of this, your luck, if you will, in terms of when you actually retire and what's happening with the markets. So one suggestion I may make to you to think about, and for you to talk with your advisor, is to whether or not you should be setting aside a bucket of income, 6 months, a year, 2 years, 3 years, whatever you think is necessary, so you don't have to immediately draw income from your portfolio. The final item to take a look at is really on the good side, if you will. It's turning lemons into lemonade, if you will. You may have some line items that have lost some money. Here's a tax opportunity for you, which is the last conversation you should be having with your team of advisors. If you do have some line items in your portfolio that you think are good long term, but maybe you're down right now in them, you may want to consider, again with the guidance of your advisory team, selling them now to take a tax loss. You may want to purchase them at a later period of time. You've got to hold them for at least 30 days to hold it back so you avoid an IRS conflict. But if you do go about and you are looking for some positivity from all the red you might see in your portfolio, you may want to take a look at getting a tax loss to potentially overcome what they call a carryover capital gain. Again, a conversation to have with your accountant and your financial advisor to see if you can benefit from taking that loss from the portfolio right now, which could in the long run help you both for income and tax purposes.